Just went on Tuesday, October 4th, 2016. This is your full-length video market recap for members of the Market Chat subscription services. First of all, I know I've been posting the last couple videos as YouTube's Vimeo, the platform I usually use to upload the videos. They're a little glitchy today. So if there's any inconvenience, I apologize. I will be on Vimeo as soon as they alleviate the glitches there. As far as the market, we closed actually at 2150 on the S&P. Looking at the daily chart, S&P 500 index daily time frame. My charting software a little slow to upload. Again, 2150, right on the nose. So we're teasing this idea maybe of more weakness. We have a vice presidential debate tonight. I believe the first and the only VP debate in rural Virginia. I don't think it's going to be anywhere close to the Super Bowl-esque ratings that the first presidential debate had. I think it'll be much lower rated, frankly, than even the Sarah Palin Joe Biden debate from 2008. It'll be much, even probably Paul Ryan Joe Biden from 2012. It'll probably be less rated than that. So I doubt, barring anything out of left field for us as traders, I doubt anything's going to come out of the VP debate that's going to affect the market one way or the other. We also have Hurricane Matthew, I believe, out down by Haiti at the moment. A very, very powerful hurricane. Let's just cover a couple issues there. GNRC, a lot of call buys, and you can see surging. They do generators, backup generators. Look at the weekly chart. Still may have room to go, maybe to tag 40 or 41. This is always a tough part, trading news. That's why I generally shy away from trading news. I mean, you just up and away several days in a row. And then today was the big spike into prior resistance. Again, a 1 to 3 day bull flag would work wonders here. The play I'm looking at is Energizer, ENR, batteries, right? Above 50, I think that can work. Batteries for flashlights. And it's true, we live in an era where you may have, I don't know, solar powered flashlight or something on effect. You may have your iPhone. But again, if there's no juice, if there's no power, if the electricity goes out, old-fashioned flashlights with old-fashioned batteries and old-fashioned radios with old-fashioned batteries make a lot of sense. So that would be a little more my style, and of course natural gas around the. But that that's always. Again, it's always tough trading news like this because it's a popular story. Obviously, it's for those of you who are affected. Obviously, I hope you're all staying safe, and I hope it's kind of a big dud, frankly, and it just goes out to sea or something on effect. UNG at the 830 level, $8.30. It's a big level for natty gas to hold. So we have, again, we got rid of we talked about the vice presidential debate. The hurricane's still in play. This morning before the bell, and see, in this era, that's the risk for any market you trade. We had a non-voting Fed head, a Fed member, non-voting Fed head, talk about a really sharp rate increase, just floated out there, and the miners and gold got crushed. Now, they were already vulnerable. We thought that. But that same Fed head could have easily come out and given some really dovish thesis, even though that member was non-voting, and the market could have rallied them hard. And in this day and age, you just have to accept that the Fed, in their conquest to become extremely transparent, they're actually adding more risk and more indecision to markets, and I think that's just a reality. I mean, we could sit here and bemoan it. We can groan. We can make excuses, but that's not going to be constructive for any of us. The thing to do is just acknowledge we live in this kind of environment, and one way or the other, whether you get caught in a trade, whether it benefits you, you just have to quickly make the adjustment and go with it. So if, let's say, you were looking for a long in the minors, and again, we've been advocating this idea of this, but not necessarily in this manner, but a move down to the 200, and GDX is almost there. And at this point, frankly, an undershoot of it, and then a pivot to go much higher to the holidays, something we talked about there. It may not come for another couple of weeks, but that's the general theme. Remember, if gold is in a new bull market, that is kind of the playbook here. Spook everyone, shake out the Johnny-come-lately longs from up here who were just holding and hoping, and then go higher into the holiday. So a lot of moving parts to the market, but I did want to hit those issues on the head at the top of the video. Big jobs number Friday, and then earnings fairly light this week. Now, S&P, if we come in tomorrow and lose 2150 again, I suspect we'll see a change in character. For now, we're still in this sloppy range. We just are. Day to day, an indecisive market below 2120 probably gets things really rolling downhill. On the upside, if we gap up above 2175, 2180, that should firmly give the ball back to the bulls. The NASDAQ, see this right here, this chart. If you're wondering why I'm not chomping at the bit and smacking my lips to go long the VIX, to short everything under the sun, you look at this chart. I mean, this is the big bad NASDAQ Composite Index, and it's just floating down river view or upriver maybe above all rising and property line daily chart moving averages. And this chart of the big bad NASDAQ, again, that hasn't helped you in terms of just throwing a dart and going long any stock in the market, but it should give you pause from being too gung-ho about shorting just yet. If and when we break down, this thing will break down harshly, but not yet. Small caps bounce off 50-day moving average, and the micro caps, again, just floating here. So, yes, the mega caps and the Dow look weak. McDonald's looks horrific. I did go short Nike because that chart looks horrific. And I'm short Home Depot. These are big cap guys, and large cap names are underperforming. Large cap, kind of those big names are out underperforming. But maybe that's not such a bearish thing if and as long as and until the NASDAQ, the micro caps, the small caps, keep outperforming. So that's where we are. Mid caps kind of in the same boat as the S&P, and then the New York Stock Exchange Composite Index and the Wilshire both just kind of, again, skating along neutral. They look like the S&P, frankly. So that's how our indices are constructed. The middle of the pack indices versus the Dow, which is weak, and then the NASDAQ, microcaps, small caps, which are relatively strong. Big biotechs, large cap biotechs, still teasing us at 290. Some small mid cap names in the biotech land outperformed today. I mean, Spark, not bad. Bluebird, not bad. So a couple names to keep on the radar there. Healthcare, still a mixed bag. Still a tough sector. They're consolidating now. Banks had a good day. XLF, regionals, we will get some ideas here. But again, we just got to see if we get the elusive follow through. Semis, still a mixed bag is below the surface short term. But definitely some names we want to watch, and still a beast, just a monster of a group this year. Consumer discretionary, retail, again, mixed bag. And transports had a chance to really break out today, but a last-minute hesitation on many rails as well. So we may get a little bit of backing and filling. As long as the Dow Jones Transportation Average holds above 8,000, I still think a lot of rails should be on our radar. It was just a question of were they going to go now, or maybe do they need a little bit of time to kind of consolidate, and then we'll take a crack at them. Home builders probably don't like TLT getting worked and going down. Remember, when TLT goes down, ETF for treasuries, rates go up. In the bond market, that's how it works. Prices down, rates up. And so higher rates probably not good, not what the doctor ordered for home builders, home construction stocks. Another reason why I'm staying with the Home Depot short, I mean, look at Sherwin-Williams. Paint, right? Obviously a derivative of housing in some respects. Paint and not looking good. So again, we got to put the rates puzzle together. Cybersecurity plays on the whole still a strong group, and same as social media plays, still pretty darn strong this year. Again, along the lines of rates, REITs, utilities, the XLU utilities, and the staples. Staples may have a little bit more to go lower, but they're all down to their 200-day moving averages, and I do think they're short-term oversold. It's going to be really interesting to see how they consolidate. I still think Procter PG is a holdout here. I mean, it's a staple. I think it can follow Coca-Cola and Kellogg's lower, General Mills lower, but it's just a question of if that's a tough cookie. It's holding out for now. We'll see how that goes. But generally speaking, these are weak. These are weakening sectors. I think they could have easily topped out on perhaps a multi-quarter basis into consolidations, bear flags, weak bounces. We can revisit them as short ideas now. This was a doozy of a fake out because we were downtrending in the utilities and we broke them higher in September. When you see this setup in trading and charts, it can be it's a good example of how bearish that can be. When you break a channel to the upside, a lot of people are going to see it. I mean, a lot of people have access to charts these days, and they're just going to easily chart it and say, hey, look, we popped out of it. But you want to see now, can we hold above it? And that's the methodical nature of trading that I think a lot of people don't like, is that you maybe build a starter position, then add to it if they follow through. And instead, we broke out, we were churning, and then we actually obviously slipped on the banana peel, did utility. So it's a good lesson, I think, about how markets can work sometimes in terms of a breakout, but it's a fake out, and then from failed moves in one direction often come fast moves in the other direction. And that's what we've seen. So interesting action in the utilities without question. Energy, one reason I got out of FET, had a decent win on it, was I just didn't like that late day fading in XLE, OIH, oil services, maybe a little more weakness than I wanted. So I still like Forum, FET. Those candles are a little bit wacky the last 2 days. I prefer they kind of reset, and a lot of other, like Sanchez gave up more than I wanted to today. I'm not long it, obviously, but I wanted to go long above 9 or so, and I didn't like seeing it down 5%. So my thinking is let's let energy reset and then we can get in again. And same with, obviously, we talked about this last night. This potential inverse head and shoulders bottom the risk was the precious miners. And we saw that today. I mean, you look at steel, even they started to get hit. And, maybe you should welcome this tech resources pullback. This is a monster uptrend. Of course, at some point, it's going to shake and bake, and it should. You should welcome. You'd like to see it down to 16, maybe 15, and then gear up for a Thanksgiving or Santa Claus rally. That should all be welcome. Same with Stillwater, Cliffs. BHB's had a great week. That looks tired short term, and we want to welcome these pullbacks so that we can get a lower risk, higher probability entry. As tedious and as boring as it can be, as grinding as it could be, waiting for it, the fruits of that labor should be seen, I think, if we do get that end of year rally. Okay, again, that was the risk with the XME. The same with the XLB, as in Boyd, the fertilizers. Emerging markets, as you might expect, China. Although the caveat with China, this FXI ETF is not reflecting the strength in some of the internet plays. China internet plays were on fire today. I almost took Sina. Again, what I want to do is just come back tomorrow morning and see if they hold up. But Sina looks good. Again, we talked about VIP Shop last night in the recap. Pardon me, not VIP Shop. We talked about VIP Shop, VIPS, not Vimple. Vimple's the Eastern European or Russian telco, which looks horrific, but looks like a short. But VIP Shop is China. JD was on fire today. Again, Weibo, Sina, Sohu. We'll see if that gets going. YY got going. So again, China internet was hot today, and I still think Sina could be actionable. We'll again follow up on this on the watch list and see if they get upside follow through. Russia obviously getting dinged. I think oil once I saw oil go red, that was another reason why I wanted to step aside out of FET. India kind of held up, all things considered. Brazil. So again, emerging markets kind of intimate today. The other issue from the top of the video, Deutsche Bank. Deutsche Bank was green, and stocks did not necessarily key off that today. So interesting there. We're not going tick for tick with Deutsche. We may be moving with bonds again. Again, just have to see how that shakes out. But bonds still could be shorts. TBT, TMV, double, triple bear TFs not yet overbought, or TLT not yet oversold. Okay, big names here. Apple, a lot of people are watching this one. That's the only risk. Above 114.30, 115 looks like a long. Amazon's great, but probably needs a rest. Facebook and Alphabet still resting. Netflix, if it holds now, this is a good, we want to pause now. If it holds above 100 in the 200-day moving average, it'll set up a long. Price line is still a monster as long as it holds above 1476, 1480. Constructive, looking for a long. Tesla, neutral. I would say back to neutral. Not a short, not a long for my money yet. Under Armour below 38. Looks like it could easily be a short. Again, I am short Nike again. I think Starbucks and Disney are actionable shorts into weakness. So again, you just still have to be precise, I would say. Chipotle probably could have gotten dinged more today. Again, sellers may be exhausted, but it hasn't broken out either. No confirmed bottom. I'm just kind of neutral. And again, Baba, along the lines with its buddies, its China buddies, Baba, probably a long idea back into strength. Twitter, consolidating its recent run up. That's a good. That's what you want to see, as long as it stays shallow. Yelp went red to green, which is impressive. Pandora gapped up. I think got positive comments out of Goldman. They have product line coming, so I think Yelp still could work into further strength as long. And Pandora, maybe a little tough to chase it, but again, 1 or 2 days above 1445 should give us an entry there. GoPro, again, if the market was stronger today, I probably would have taken it this morning. Came out of the gate running, and then again, at least 8 out of 10 stocks, as we like to say in the service, tend to move in sympathy with the character or the essence of the broad market. So I think that's what we saw today, where GoPro had every chance to really wreak havoc on the market. And then all of a sudden, and shorts, really, it's a heavily short name, then it fell back in. So let's see if it gets above 17 again. Fitbit still needs time to heal. So does Mobileye, which looks like a mess, and Taser. So there are definitely broken names out there. We still need to be precise. Other leaders, again, Exxon, Schlumberger, a little bit of softness today. Maybe energy needs to reset. Intel, Qualcomm, the big chips, still not bad. Still holding up pretty well. And again, Goldman, JP, Citigroup had a great day, all things considered. Bank of America, Morgan Stanley. Yes, they faded off their highs, but a good day for banks nonetheless. And I think in terms of the regionals, Zion, PacWest, I think PacWest could still be a catch-up long, and Huntington, H-Bond into strength. BPFH, an interesting play, regional play here out of Boston. They're an interesting company. Again, Regents, those guys, I still think they can work. SunTrust, it's just tough nailing down an entry because the banks seem to be flopping around day to day. And you'll notice the rates puzzle. Gold got whacked when the Fed member came out with really hawkish comments, and the banks thrive. Now, here's the thinking with gold. What if the Fed actually does raise in December, which is still a long ways away? Can gold still rally into that? And the answer is yes, because what if gold sniffs out, as it can do, that the Fed may be raising rates, but then they're going to eventually have to ease again if there's too much pressure, if markets throw a tantrum. That would be a scenario where the metals and miners can thrive. So again, open mind here, but technically I've talked many times about what I'm looking for there. See how that plays out. There again, DR Horton, DHI, the big home builder, still looking like an actionable short into weakness. Let's get into the big biotechs here. Biogen, still coasting along. Could be a long. I like Biogen better than Celgene, Amgen, Regeneron, and Gilead in terms of long. Gilead back to looking atrocious. Gilead looks very weak and vulnerable again. So I think you consider a short, and Biogen would only work as a long out of the group, in my opinion, for me, imminently into strength. Valiant, Horizon, MNK, still off the board for me, not looking at them as longs. Biotelemetry, other healthcare plays, which have been better, not looking good now. Vive, Metadata, looks like they just need a rest, a reset. CSII still isn't bad. Medical device plays, GQS, not bad. These medical device plays, EW, not bad, but not necessarily breaking out imminently. Same with INGN, VASC. So we got to keep tabs on them, but at the moment, obviously they're not thriving. The charts that have my attention, RPD, Rapid7 Inc., a software. It's trying to prove this big bottom here, but look at that relative strength today. Mime, I'm still long a piece of this. I'm still holding it. I think maybe it has the makings of a monster. We'll see. Zendesk, ZEN, nice red to green. That's good. That's pretty much what we want to see. BCOV, still good strength, and Shopify, still a really fast growing company. So relative strength, that's what we want to see. ServiceNow, all things considered, that's holding up pretty well. So we definitely want to have, now EBIX was disappointing today. So again, we have to have some levity and be real. Paycom, that's not necessarily what we wanted to see. Cornerstone, that was disappointing. So days like today, perhaps separate the wheat from the chaff, and we just want to have our very best ideas going forward. Who held up today? Etsy, obviously, that's just brilliant action considering the market this week. So Etsy's doing well. Let's keep that on the radar. And Acacia, out of all the momentum darlings, Twilio, Line, PI, it looks like Acacia, if and only if it gets the pricing right with the secondary above 106, I think could be back on the radar on the long side. So I would keep Acacia back in focus if we can get going. Scott's Miracle-Gro, still a decent setup, still worth watching, in my view, on the long side. Okay, again, I mentioned Sina, SINA. That'll be on the radar into tomorrow on the long side. And look, as far as the ideas we looked at last night, BSBR, GGAL had a great day. ITUB, maybe some of these South American banks will get going again. Those are ideas to keep on the radar in the background. Sands and Win, just look at that, was very disappointing out of the casino, especially Win today. Just gave up the ghost of the Macau. So no follow through. Again, tough market. You accept it for what it is. Duncan's going to consolidate up here. That's good. Let's watch for a new entry. I'm still long. PayPal, it just has to clear 41. So far, so good. And same with Cryogen, just has to clear probably 27.50. I'm still holding them. Decent action, all things considered. GoDaddy, GDDY, still actionable above 35. I still think it can work there. Okay, we got some short ideas, some long ideas. We looked at other long ideas. Skyworks into strength, LRCS. If that gets CX, if that gets going, another semi play to watch. And MSCC, micro semi, again, still coasting along. So those ideas, and then the short ideas we looked at all probably could still work. CarMax, American Express. I see American Express just couldn't hold red today, so that keeps me away for now. Probably moving with the financials, but CarMax looking a little suspect there, and Advanced Auto Parts still looking pretty weak. So that genre, that part of the market also, I would say, in jeopardy. Okay, TLT still looking weak here. Rates up, dollar up with on the hawkish comments, as you might expect. Dollar up, euro down, but not as much as I thought. Swissy franc down. The Swiss franc FXF, I think, still, look, the overall downtrends are still Swiss franc down, euro down, and then dollar since the last couple years. Let me back it out here. Dollar up. So you can see the dollar's been in this endless multi-year consolidation as currencies can do. So it's just a chop fest. And the yen got hit today off the interesting there off the hawkish comments. The crude oil inventory report is tomorrow. Let's see if it holds above 1080 again. Natural gas back on my long radar, probably above 860. 860 I can try. I think UNG back on the radar. Gold, silver, just a little more weakness, one more gap down. I'm getting interested. I want to see an undercut of the 200-day, silver Wheaton, pardon me. They're all moving in unison. Agnico, Barrick. So I think we did a pretty good job sidestepping this. Let's see if we get some actions. The upside, still avoiding solar for now, for those of you asking. And then Ford and GM, they've been holding up too well. So I'm not looking at them. Probably take them off the short radar for now. Yes, console is holding up well in terms of energy, but it wasn't enough for me to hold on to FET. I just wanted more sector-wide strength there. Okay, soft commodities. Sugar back on the radar on the long side. Looks great. Corn, so far so good. Let's see if we get it. Looks like a bottom if we get a confirmed close. Wheat needs to follow corn up. Let's see if wheat follows. Doesn't need to, but that'd be something we're looking for. Cotton torquing up. Isn't that interesting now? Soybeans, inside day today. Let's see if it makes another push higher. Kind of a nothing day. Let's see if it goes higher tomorrow and follows through. Cocoa trying to come back, and coffee needs to get back above 21. So sugar, corn, still very much in the radar. The VIX should have been up more today. It should have. I mean, that is a joke. The VXX and the UVXY are red today. That's horrific. It means one of two things. Either there's literally nothing to worry about, or the market is beyond complacent. So let's see how this plays out. But look, the bottom line is whichever side you take in that argument I just laid out, you think the market's complacent and stocks are going down and the VIX going up, you still want to wait for it because how dangerous these things can be. It could make the moves we saw in Nugget today look like child's play. I mean, these VIX ETFs are really, really nasty at times. So they're not quite ready for prime time. It could be a delayed reaction if stocks keep going down and then people freaking go up. But let's see how it shakes out. I hope you're enjoying the service. You can always email me, chessandwine@gmail.com, @ChessTrades on Twitter, private Twitter feed for you, the member, Raymond James, Schwab, the brokers, the online brokers having a decent week, ignoring the market weakness. So, yeah, that's another group we're going to want to stock into pullbacks. Thank you so much and have a great evening.